Welcome to Investors Insight, where today's topic is the Fed Grinch. We hope that everyone is having a great holiday season so far and that everyone is excited about the new year. But first, we want to follow up from our vlog last Monday, as a lot of important things happened last week that will impact the market going into 2023. First, Ty, I want to start with you. Give us an update on the inflation report that came out last week. Please, sir.
Yeah. So something that, was a nice Christmas surprise here, I suppose, was CPI was lower than expected, 7.1% inflation number compared to the 7.3% expectation. Market really took that in stride, was really rallied on the news. That was on Tuesday, I believe. So that, that was a good report. We saw the transport costs coming down. That's a good sign. Really the only kind of negative thing on the report there that really stuck out, food and beverage costs still elevated. We need that to come down. But overall, really solid inflation report that the market really enjoyed and took in stride.
Yeah, and Trey, we named it, the title of our vlog is the Fed Grinch for a reason. So please give an update on what impact the Federal Reserve decision last week will have on the markets heading into 2023.
Yeah, thanks, Bobby. So you're right. In last Monday's vlog, we talked about the two big data points being inflation and the Fed, and we were looking at two numbers. Inflation needed to be below 7.3, and then the Fed's decision on interest rates, we were expecting a 50 basis point hike. Well, inflation did its part, and the market rallied from the inflation came out Tuesday morning before market opened. Market rallied Tuesday, rallied Wednesday into the midday Federal Reserve decision. Jerome Powell came out in spite of the better than expected inflation data comments and the dot plots of what the Fed projects the interest rates to be going forward were much more aggressive. They did raise rates 50 basis points in line with expectations, but it's what they said about future rate hikes were much more aggressive than what the market thought, considering that inflation was coming down. And so what was interesting though is after those comments, the market did sell off for the rest of the day and through the week, but interest rates, long-term interest rates actually came down. And what that's telling us is that the bond market and the stock market are expecting, even though the Fed says they're going to raise rates, they're likely not going to be able to because the Fed has already misjudged the economy, and we might be heading into recession, which will cause the Fed to raise rates and then quickly turn around and cut rates because they've moved the Fed funds rate too high. So interest rate expectations for the federal funds rate actually fell in spite of the Fed saying that they would raise rates further. So a little confusing there, but what long and the short of it is, what the market is telling you is the Fed is on the wrong side of this fighting inflation.
Yeah, and if you have watched our vlogs this past year, you know that we have stayed focused on inflation and the Federal Reserve actions. And there are many reasons why, but one reason can be seen in this chart here that highlights the average daily return of the S&P 500 and its different sectors for all consumer price index release dates since the Fed began raising rates in March of this year. And the returns were bifurcated between days when year over year core CPI came in above or below estimates. So in terms of the broader market, the S&P 500 has posted average returns of 2.4% when core CPI surprised to the downside. We show this because our hopes are that inflation numbers will continue to trend down in the new year and that the market will react more positively in the new year with these lower inflation numbers. So it's something we will continue to watch every day and definitely continue to talk about in our vlogs in the new year. But like I said earlier, we hope everyone is having a great holiday season. If we can answer any questions about anything going on in the markets or the economy, please reach out to us. And again, have a great holiday season and talk soon. Thank you.